Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Thursday. It is the 21st of March, a pretty bullish day in the market as traders kind of had overnight to kind of think about maybe what the Fed announcement meant. Well, I guess they came to the conclusion that they liked it, at least for today. So a lot of buying in the market, NASDAQ blowing through that 7,400 potential level of resistance like a hot knife through butter. So tech remains very, very strong. You're getting Apple and Amazon and Google in the game. So we're definitely seeing some nice buying momentum as we speak. And I hope everybody's having a great day, both in and out of the market, as we slowly but surely are getting ready to wrap this week up. Looking at everything looks pretty green. Financials are still looking a little wonky. And hey, Fortino, good to see you, my friend. Hey, I'm going to do it tomorrow. I will be there. Matt, Tim, and Noah all have some travel plans. So Cody and I will be taking over with no moderation. So I don't know, maybe be careful what you wish for, right? But we'll see you in the halftime report tomorrow for sure. And in the first half of next week as well. So we'll see if they can get back in when it's all said and done. And hey, Micah, hi, Linda. Hope you are doing well. And I had a great day trading. The one area of the market that is showing a tremendous amount of weakness right now in the financial sector, but more specifically, it's the banks. If you look at the heat map for the S&P 500, most everything's green. You have Biogen. They had a big drop down, pulling phase 3 trials on an Alzheimer's drug. That was an individual stock, though. In the financial sector, kind of everything is kind of ugly. We looked at some of those big banks yesterday, still continuing that pressure, but they're now working into some support. That'll be an interesting battle. But our regional banks blew right through support as a collective unit here today. All these little red corners that you see here in the financial sector, Southeast regional, Mid-Atlantic regional, Midwest regional. So just a ton of pressure right now going on in the bank. So an area that, from at least a bullish point of view, I'm going to let that area play out a little bit before I think too much about it. And good afternoon to you, Emily. Hello, Marcelo. Great to see you guys as always. Hope you're doing well. This is one of those days where you can't really complain too much at all. Sold off a little bit in the futures market, but basically right out of the gates on the open, boom, just run up, and all day long stayed above that 15-minute 9 exponential moving average, which is not an easy thing to do. That really shows there was a lot of momentum all day long. A little bit of selling at the end. I would assume that's probably some profit taking from a day trading perspective, but who knows? Yeah, I wouldn't mind another day like this, ever. And it can go on indefinitely if it wants to, Em. So we'll see if it wants to or not. We're going to have a couple of things that we're going to have to deal with as we go into our daily time frame. We are, at that or close enough to this old pivot on the S&P 500. I'm definitely taking today as another bullish signal, and I'm not overly concerned, especially, longer term or more medium term at this resistance level. But it is there. It was an important price before. It was a breakout point. It was a pivot. It was our breakdown point. So I do think we want to keep an eye on how we behave in this area. Certainly not bearish at this area by any stretch of the imagination, but certainly I'm going to be keeping an eye on. Beyond that, really the highs, I can't really say that there's any reason beyond that little resistance level that we are going to have to contend with. There's just not much until we work into those highs over in the S&P 500. So, you got to be liking where that one's at. Probably not as much as where the NASDAQ is, because it said that old pivot was important, Frank, but I don't care, and pushed right through it today and just boom, 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 pushing all the way almost to 20 to 7,500. Not a lot of resistance. This area is very strong. Semiconductors, tech as a whole is very, very strong. The semiconductors are all looking very strong to me as well. So I don't really have any reason to believe tech's not going to continue to show some pretty nice strength as we work into the end of the month, into next week's or next month's earnings. Which, man, starting next week, we'll start talking about more and more earnings. So I'm so out of earnings season. I forgot to report that Nike has their earnings tonight, and as we got going, it looked like on the Nike earnings, kind of taking a sidebar there because Nike's kind of a big deal. They beat earnings by a bit. Revenue was pretty much at expectations. Haven't got a chance to see what guidance or anything like that's going to look like. So we'll keep an eye on Nike. But you had Nike, CTAS was also coming out, an S&P 500 company, and then Tiffany's coming out tomorrow. So we're so out of earnings season, I forget about earnings. That won't be true in a week and a half. But over in the NASDAQ, I mean, really, I'll be keeping an eye on anything, from here on out. But from a resistance point of view, I mean, I don't really see anything significant. Maybe we can look at this little short-term high around 76, as a potential resistance catalyst. But really, we're looking at some highs as far as any real levels of resistance. Obviously, all-time highs we should always be mindful of. But before we get there, it's just not a lot, at least to my eyes. There's not. Tech continues to be very, very strong. And hello, Marie. Hope you are doing well. Great to see you. Over in the Dow, finally getting in on the action as well. And that maybe is even more exciting. Well, hey, the tech sector has been great. And, you guys have been all over that one, as have many traders. But nice to see Dow trying to get into the game. A really decent day. We do have Boeing that's always kind of there sitting on top of the Dow. Any given day seems like it can do anything, but it's kind of simmering down. Still don't trust it. Wouldn't want to do anything with it either way, but simmering down is okay by my standards. Good solid day. Still have some room. We're going to have to kind of individually probably think, what do we make of this shadow or this tail that we put in the other day? Do we think that's anything worth noting? I don't really think it's that concerning. You guys know me, I'll keep an eye on it because I keep an eye on anything that where we've seen price action before, but I don't think that's a major level to be overly concerned about. We still have some room. If this market wants to run, we still have some room in the Dow Jones before we test, that significant level of resistance. And even the Russell trying to get back in on the action here today. That's the kind of day it was in the market. And I'm still not there. I still like this one the least. I still want to see it break that resistance to give me another bullish signal. I'm not going to call a break of this resistance a buy signal. I will call it a bullish signal, but I'm still, on the rut. It's still pretty much break this 1600 resistance level before I really, really like you. But I would definitely call a break above this resistance that we've now established for over a week as another bullish signal if we are able to get that. So, I mean, just a good solid day all around the board, big break on NASDAQ and a nice run, nice momentum behind that break as well. Speaking of breaks, we did not get it yet in the material sector, but we are knocking on that door, running right up to that resistance, closing right at the $56 mark even. And good afternoon, Justin. And yeah, it was a good day to be a bull. That is for sure, especially in certain areas like tech and discretionary. I was very happy with the way it performed the last couple of days. And when the market got running, as we'll see, it really got running today as well. But on the material side of things, they had a good day. Most things did, running right into that resistance. As you guys know, that resistance has been a big deal, whether we're looking at the pivot points back here or just the price action over the last month continues to be a big deal. I think in part, Marcelo, was as part to yesterday's run, but I think part of it was just kind of digesting it. Right. I mean, we're overall in a bullish market. And the one thing that, I believe in at least is when things are going one way, the market wants to continue to do that. I believe that what it's overall doing is probably the most likely thing it's going to continue to do until it stops doing it, if that makes sense. And so, I think we had some interesting setups in utilities and real estate. Of course, we've seen a ton of strength in technology. So I think it's more than just that, Marcelo. It's just with the way that the market's been lately, there's always seems to be an area that looks better than other areas, right? And you may not always agree with what I think those are, but there's always, whether it's tech, when it was first breaking out, or the pullbacks in the more defensive utilities and real estate yesterday, or the original break in discretionary, or even the bounce off of support on healthcare. There's just always seems to be an area that kind of picks up the slack. And that's at least how I'm kind of reading it right now. I will continue to claim that I'm looking at this break, if and when it happens, as another bullish signal in this sector. I do like that signal quite a bit. We've had a heck of a time. We've been here a few times. We've had this exact conversation several times over the last week or so. Hasn't happened yet, but certainly a lot of momentum going into it. So yeah, you'll see days like this. And, really, it wasn't that big of a day, all things considered, Marcel. I mean, up 1.5% on the NASDAQ. I mean, that's a good day, don't get me wrong, but you'll see bigger ones. So yeah, and it was a little bit of a pullback. I think Noah kind of talked a little bit about it in the halftime report, where we were pretty extended. And even though it was just 2 days, and it's probably not what we would call a textbook retracement, it did give things kind of a chance to reset a little bit. So when we saw that upward movement, some of these stocks had pulled back some. And that, of course, that could be an enticing, area to get in. So we'll continue to watch 56. Beyond 56, realistically speaking, to my eyes, we're looking at about 57.30. Not a whole lot in the way in the sector, on the sector ETF, in the materials sector right now. So there is, in my opinion, room once to run a little bit once, or if, probably a better way to put it, we do take out that 56 area of resistance. We got our close above the 67 mark here today in energy. I will call that a bullish signal. We've been knocking on the door really all week long. Ran right up into it a couple days ago, broke out on the intraday yesterday, closed above it here today. A little more upward momentum tomorrow is really going to have me liking the energy sector. I really will look at that as a very solid signal. Not a lot of resistance again for me, and I know it's not maybe a ton on the ETFs, but it can translate into room to run in the components of the ETFs, right? On the energy sector. As far as the ETF goes, though, around $69, we do have a lot of history, or at least pretty important history, in my opinion, at that marker. So 69 is kind of that next challenge. If we can maintain this break, I'm going to be looking for it to try to work its way into the $69 mark. So nice start here today, or this week, really this week. Over in financials, I mean, you got to be careful with it, in my opinion, right now. It really is, for the most part, random components of the financial sector. Some look okay, some look, not so interesting. It's really the banks that have been a big, big catalyst for all of the selling that we've seen this week. And a lot of those regional banks have broken, swing support levels. Not really so much on the major banks. They're kind of working into them. They look a little bit somewhat more like the ETF does, but I'm going to kind of shy away from the banks right now personally. Other things I'm going to be okay with. On the ETF front, we are holding support. We did work down into that. A break below that, going to be a little bit of a bearish signal. I think you have to be concerned that if we do break this support level, a little bit of a double top breakdown has occurred. Hasn't happened yet, and I do expect that support to try to hold, but there's only so much. We've seen it, we saw a little while ago in healthcare when one area really is all, making a significant move to the downside and breaking support levels, it really can put pressure on the overall sector. So I think this is an important number to be keeping an eye on. As long as we're above it, whether it's neutral or, hey, I'm willing to play off of that bounce, I could understand either argument. I'm more on the neutral side right now, but I'm not bearish until that breaks personally. Although I am bearish, not going into new trades tomorrow, but on those banks, some of them look pretty ugly, breaking through support and really falling through. Just a rough go. They are not responding well to the no interest rate hikes. And maybe it's just a short-term thing. I'm not overly concerned, big picture, but just kind of thinking, in the shorter term, I'm leaving them alone. On the ETF, though, I mean, you do have to like that we did respond off of support here today. Yesterday, we really saw nothing but selling on the sector as a whole. Today, some of these other areas, whether it was the bigger banks or some, insurance and things like that, we're catching their footing. So it's got some fight in it, at least to my eyes, but just not why mess around with it when so many other things look nice, I guess. So over in industrials, same real analysis as before. We've basically gone into one of these little ranges with our bottom at 73 and our top at 75 approximately. I'd like to see it come out of this range before I get too excited one way or another. I do like a break, especially if this kind of is one of those things that happens maybe mid next week, as some of these other breaks that are happening right now kind of run out of a little bit of steam. That would be interesting. That maybe we can ask for that. I don't know. But anywhere beyond this, once we close above this resistance, I do expect us to try to work back to 75. But I think we need to break that resistance for me before I'm really all that excited from a bullish point of view. On the other side of it, I think you can make an interesting bearish argument if we do take out this swing low at around $73. That would be lower highs, lower lows, falling through all the moving averages. So it's a little area that's just not cooking right now, not loving it. We'll like it a lot if it breaks, I think. Probably would depend when it happens, but still within that range for me. Over in tech, they said, Frank, 74 is cute and all, but we don't care. Let's go to 75 and see how you feel about that. And I mean, it was much like the S&P. I mean, it was a top to bottom type of day where we just went up and up and up and up, really generating, even on the short-term time frames, not any sell signals. So great day for new entries tomorrow. I don't know about that, but certainly a great day to be in tech. Great day with trades that we've had going on in tech over the last little while. Again, we've got a high that we're going to want to keep an eye on around that 76, just north of that 76 marker, which is probably, again, going to line up with the NASDAQ pretty nicely, but no real resistance between here and there. A pullback would be perfectly reasonable after a day like this, but it is very, very strong. Not a whole lot to say. All of the chip makers looking really good. A lot of them broke out today, or even a couple of days ago we had AMD break out. But you're seeing a lot of strength in the chip makers as well as PayPal hitting an all-time high. We're seeing all sorts of goodies, in the tech sector right now, at least from a bullish perspective. Hard to make a case against that right now. I think we're above everything. Next stop, probably resistance, at least in my opinion. Whether we need a pullback or a consolidation before we get there, that would be fine. But I don't really see any reason to think that we're not going to knock on that 76 door in the relatively near future, especially if we can continue to hold that trend over in the NASDAQ. Over in the staples, finally going to have to make a call on the staples. I've been personally waiting for that break of 55, as you guys know, for that bullish signal. I will absolutely call this a bullish signal. Now it's happening at the same time a lot of other signals are happening, so it's probably going to the back of the line. But I will definitely call this close above 55. Basically, I wanted to be sure I was above this pivot and this resistance area that we've been dealing with. And I think today's candle sells me on that, a little bit of upward movement. I'm always interested in, on these breakouts, that follow through. For those of you who are new around here, we closed above it. That's a big, big deal to me. Do we get that follow through? Can we continue that upward or downward movement if we're looking at a bearish trade? I've just learned over the years, at least for me, that follow through as confirmation is really, really important. But I do have to call it like I see it, and I see it as a bullish signal in the staple sector. And this has been a tough one. It's really had a hard time, as you guys know, pushing through that resistance level. So we're just one day, but again, that wasn't an easy thing to do. And maybe it was just because everyone was buying today, right? And it just got caught up in the good times. Well, if that's true, that follow through is going to be a lot more difficult to find, right? So that's why I do like that follow through. Over in utilities, as is so often the case on these high flyers or these really strong areas, and we've seen it time and time again, folks don't need much of a reason to get into things. So yeah, I mean, things are breaking and resistance all over the place, Marcelo. You're absolutely right. And utilities, had pulled back into that old breakout point. We had that really big doji here yesterday, and that was all it took to get traders interested. And a really great day over in the utility sector, and nice confirmation overall from the bullishness of the sector, in my opinion, with this nice upward move off of this resistance level, a little bit of a test of that breakout. Still have nothing but nice things to say about the utility sector. Personally, 57 is kind of the primary support zone. I would still maintain that's now the breakout point and a little bit of a support bounce for us. So no reason in my mind not to continue to believe in the utility sector. Nice follow through off of working back into that breakout point in utilities. Healthcare was interesting, and it's trying to work its way, kind of have it, as you guys know, kind of a, on a timeout, not a timeout, but, I'm being very cautious and approaching it basically on an individual component basis right now. One thing I will say, we had Biogen that gapped down 25% on the open. Of course, that really put a lot of pressure on the ETF, on the sector as a whole. But after our gap down on the open, really got involved as well, and so it's easy to say, hey, everything went up today in the market, and that's true. When everything's going up, it's easy to go up with it. But if we're talking about this in real time, that first 15-minute candle, that big gap down here, that wouldn't have been an easy thing for me to say. At least I'd be saying, ugh. If that breaks, that might get ugly. So we really saw, in my opinion, a lot of resiliency, especially early in the day. Not quite as pretty as maybe tech was, or the discretionary or some other areas, but very, very resilient off of that. That's kind of big news. Biogen, big company. So whenever something that dramatic happens, that's a catastrophic gap, dropping down over 25% overnight. Really fought back nicely to close yet again above this. Gives us more reason, I think, to believe in that 91 as a support zone. And we've been keeping an eye on it. We've seen history there before. Just another feather in its cap. 91 probably the primary support zone. Of course, this 93 to 93.50, wherever you're calling it, probably the primary level of resistance. I still am looking at it on an individual basis, as opposed to overall. I like healthcare. Overall, I just like tech. I like many of you and many other traders out there. Healthcare, I like some healthcare. I like Merck. I like Abbott Labs. So I like, I like some of the, the medical device companies. I'm still not ready to turn, for the better for the healthcare plans, but at least they're putting up a fight. So it's getting interesting in that area, but I'm still taking a pretty cautious approach personally overall within the healthcare sector. Over in the materials, goodness gracious, over in the discretionary sector, this is, why, patience pays off, right? Or at least sometimes it does. So we've been watching for that break, or at least I've been watching for that break of 112 for quite some time, as you guys know. Broke it a couple days ago, held it, but came well off the highs. Held it yesterday amidst some selling post-Fed. Today, really got running. Very strong day, very strong candle. I continue to really like the discretionary sector. I personally do believe that we are working up into this 115 area as our next level of resistance. I'm definitely liking this area. I expect, as I'm preparing for the scouting reports tomorrow, I suspect that I'll have more than a couple discretionary stocks in my list for discussion. I do really like this area. I really do like that break. As you guys know, that was one I was very looking forward to if it ever did happen. Nice to see some movement off of there. Pullback would not begin. Everything had such a nice move. Don't freak out. And I'm saying this to you, but I'm also saying it to me, if we see some pullback, right? So, I'm not saying that's going to happen. Just kind of mentally always prepare yourself. Hey, we had a nice big move to the upside. If there's a little bit of profit taking, that doesn't mean our charts have turned. That doesn't mean the trend has broken or anything like that. If it does, that's a different discussion altogether, right? But certainly things don't have to go straight up or down for us as much as we We like it when they do that, though. We don't complain when they do, right? So good solid day over in the discretionary, and a great day over in the real estate as well, up nearly 2%. Again, much like the utilities, and maybe more exciting, at least for specifically today, it didn't take much. We had that pullback. We looked at it. I know we looked at it yesterday here, and in the halftime report as well, and a couple days ago in the halftime report too, I believe. Just a good solid pullback in a good strong trending area. We looked at some of those individual components yesterday on the in the real estate ETF. I mean, it just is a juggernaut right now. I mean, 2% in REITs. I mean, that's a big day. REITs are supposed to be boring, slow moving, paying you those nice regular dividend type of deals. And they still do that, right? So when they're really moving, they're very appealing, I think, because, hey, I can get the dividend and get some nice, price movement, basically hitting a high. I mean, this is it. This is as high as we have ever been on this real estate ETF. As you guys know, so many of the companies within this sector are doing the same thing, just continues to be very, very strong. Really hard to say anything but positive things about this sector at all. And over in communication services, very nicely done. Nice move off of yesterday. We saw that upward movement yesterday, pushing right back through that here today. Google continuing its little run, showing a lot of strength. Netflix holding its run. Netflix has had that for whatever weird reason, and I've had them on timeout for a while, so this one's just going to have to play out before I'm thinking about it. But for whatever weird reason, they were just having a really hard time. They'd break out on the intraday, but never have any follow through. We finally saw it yesterday, and they were able to carry that momentum. Of course, Google, I know we looked at them yesterday. I'm sure you guys have peeked at Google a time or two today, but really continuing that breakout that was developing. Again, probably depending, we talked about in the halftime report, where exactly you would have called that would probably be up to you. But wherever you called it, I think by the time we closed yesterday, we were there. Very nice follow through. You had EA even breaking through, much like Netflix, not nearly to the extent in my mind, but it established a very, very real level of short-term resistance. Nice breakthrough as well. So we're seeing, some good strength within this area. Finally, Facebook, not doing a lot, but they were holding their own. And that's really the important thing, I think, especially when we're thinking about this ETF. If Facebook tanking is just dragging it down. Facebook doesn't have to lead the charge necessarily, but it can be a weight or it can be a leader within the sector. So holding that support level nicely, at least, as we speak. So very good day, very nice looking chart too. Certainly I was not interested. As you guys know, I don't really trust this ETF as a vehicle at this point in time, just because I don't feel like I have a good handle on who they are as a whole. But a very nice chart with that, little bit of a pullback into a little confirmation yesterday. We're seeing good movement on a lot of the individual components within the sector as well. So, I mean, for the most part, as you look around the market today, it's hard not to feel bullish. A great day, but it's where we ended up. Like Marcelo said, we've seen, a lot of areas break resistance, which means a lot of stocks are breaking resistance or hitting, new 52-week highs or new all-time highs or knocking on the door. So we're seeing a lot of strength, a lot of resiliency overall in the market right now. As we move into a Friday, it'll be interesting to see, is it, is it a profit-taking Friday? Is it a little doji Friday? Is it to heck with it? It's Friday. Let's have fun and buy. We'll see. We'll see where that one takes us. But overall, from a technical point of view, I have a hard time looking at anything other than the market through bullish eyes for the most part. The banks scare me a little bit, and it might just be the short-term trader in me. But whenever I see that, that's going to kind of make me throw the red flag, if nothing else. So the banks is about the only real area that's really shown significant weakness, in my opinion, from top to bottom this week in the market. So interesting day, fun day for the bulls. And, this is a go with the trend, right? So make it easy on yourselves. That's for sure. Over in the VIX, really nothing to see here. Good day in the market usually means the VIX is down a little bit, so nothing really to report on that front. We were able to hold that 200-day moving average over in the dollar index, saw some nice movement On the day, we kind of worked up into this moving average soup. We kind of have our 50 and our 9 and our 20 all kind of just layered right on top of one another. I could understand the if we see more upward movement, the argument to buy off the bounce. Should have made that same play last time we tested the 200. I'm still not there. I'm still looking at it long-term within this trading range. So I'm not really all that interested in swing trading anywhere in between here, but we have seen that upward movement off of that 200-day moving average. We've got some stuff ahead of us that we'll have to deal with, but that certainly can happen, right? Again, we're just one day in, but nice to see that nice bounce off of what an area that at least makes sense, right? We've got a lot of history in that area, but probably beyond that, that 200-day moving average holding up at least for today is definitely a nice sign over there. But I still personally continue to be looking at an overall range bound from a swing trading perspective, and not really interested until it comes out of this range. It's a long time that we've been in that trading range. It seems like we've been saying that forever. I've been saying it for a long time. You guys know that. And it seems like it's been even longer, I think. The metals were interesting. While we were sleeping, they were breaking out. Or late late last night, I saw Ilka. I'm not sure if you're here, Ilka, but I saw your tweet where it was pushing through, and then it just kind of kept running. And that was pretty late. I don't know if that was like 11 o'clock or something my time, and it just kind of kept running. And then, it really started to get pretty big and pretty green. But a close is a close is a close, right? And so basically, we tried and we failed, right? We did not close above that breakout point today, adding a little bit more complexity to the chart from a swing trading perspective. I think is it, do we still call the break of this, the close above 1311 the bullish signal, or now do we look at one of these tops, one of these highs? I think you have to respect these highs. I think this makes as you guys know, I didn't really like this as a swing trade, but I did recognize a break above this as a buy signal, as a potential, because I know I'm just me, not everyone's going to agree with me. I think this added a lot more complexity to that, though. So I think for the most part, it's going to kind of need to shake out a little bit off of these last 2 days. Seeing a lot of volatility, failed breaks, and that is, of course, just my side of things. You may disagree, and that's, of course, fine with me. But for me, I wasn't really a huge fan of the break of this as a short-term trade anyway. And with the price action that we've seen over the last couple of days, in particular today, I'm going to just kind of wait for that next swing. Let it do what it wants to do, and then we can talk about it. Support, still down here at 1280. You could maybe make an argument back at 13, but I think we've seen enough movement through the 13 to not call it anything significant. Personally, maybe a little bit of support, but I don't think it's a significant level of support or resistance any longer. Assuming we can kind of pull it together a little bit, behave a little nicer, resistance for me really is going to be up here at that 1325 before we work into that 1350. What I'd like to see personally is it, to drift somewhere, whether it stops tomorrow or not, and then kind of drift back down, kind of give us a little bit of a reset or a double bottom or something along those lines. So I don't really think the way it behaved today made me excited about a swing trade in the short term. I still do like it in the long term, like I think most people do. Over in silver, we kind of saw a very similar situation, even more so though. I mean, look at this tail. Look at this crazy, crazy candle. While you were sleeping, the silver was breaking above its 50-period moving average, but closing back below that 1550 area, just below it here today. Still pretty volatile. If you guys know me, if I feel that way about gold, it means that I feel that way squared on silver, right? So that has been my way for quite some time with the two metals. I think this adds a lot of complexity. I still believe that, from a pure, technical point of view, a close above 1550 has to be the first thing that you see from a bullish point of view, but I would not be interested in that. A little more complexity in the chart. I didn't like it before this, much like gold. Yeah, not today. I still really am looking at silver quite a bit longer term for potential trade, break of resistance or a break of support. These major levels are what I'm waiting for. This in between, I'm not really all that interested in. We still are holding that breakdown point at 1550. It's been pretty wild, no doubt about it. But closing below that number again today, after really, really trying. I always call that cheating, even though I know it's not. And when natural gas breaks out when I'm asleep, I'm like, yeah, easy to do when no one's around watching you. But whether that's true or not, that's what I always say. So over in natural gas, speaking of natural gas, just another day in the range, another day in the trading range, giving us another day to think about what, if anything, a break out of this range means for us, whether to the upside or the downside. As you guys know, and this is just a broken record, and I love it. I love every day I can say this to you. And the signals are the same. A break above resistance is a buy signal. A break below support is a sell signal. Anywhere in between is anywhere in between. Unless we're cash flowing, I think it's very difficult condition to be trying to trade natural gas as a directional trader right now. Break either way is a signal, in my opinion. I don't like the break to the downside. Doesn't mean that's not how it's going to play, but as you guys know, there is a lot of history at 250, and of course a swing here at 256, so just not a lot of room. There is a little bit of room to run to the upside, and if you never worked with natural gas before, a little move can be big. So it doesn't take much to notice a move in natural gas. If you are practicing with natural gas or don't trade futures, UNG is the ticker symbol for that natural gas ETF. If you are unaware of that, there are others out there. UNG is the one that I personally like to follow, like a lot of other traders do. So if we do want to trade, not specifically today necessarily, but if we do want to trade natural gas through the ETF market instead of the futures market, unless it's an intraday trade, I like that philosophy personally. We do have that option. So when maybe that's not today, maybe it's not a break to the upside or the downside, but probably eventually there will be something that we like. And so that is another alternative to trading the commodity, trading the ETF commodities like UNG or GLD or USO, as you guys know. So another day in the range. Hope to have this conversation with you tomorrow as well. The one thing I don't want is that breakout to occur on a Friday, because I don't, these guys can gap, as you guys, many of you guys know, and I wouldn't want to be there over a Friday. So hopefully it's the same conversation tomorrow as well. And then next week, if it wants to break, I'm listening. I'm open to hearing your side of the tale, natural gas, if you do want to break. And lastly, over in crude, a little bit of a doji day, kind of finding a little bit of, if nothing else, psychological resistance in that $60 ballpark. Not really any significant resistance, in my opinion, at least, but we do kind of have this old high over here, these old lows. So, you could maybe make a little bit of a technical argument that there's a little bit there. I still am looking for it to work into that 61 to 61.50 range at that 200-day moving average as the real significant level of resistance. We're starting to pull away, as you can see from these moving averages, which is just showing that it's having a nice bullish move, but it also is kind of letting you know that, hey, if it does want to pull back a little bit, I always think about these short-term moving averages as home in my head. So when I'm sitting through a pullback, that's never been my strong suit. I am the first to admit that. When I'm sitting through something that is pulling back, if I'm extended past these short-term moving averages, I can't expect that to happen indefinitely. I can want it to, but I can't expect it to. So, if we pull back, when we start flying above those moving averages or creeping higher and higher above them, it just makes me feel a little more comfortable saying, hey, they're just working their way a little bit back home, from a management perspective. And whenever I see it start to pull away from those short-term averages, I kind of start to remind myself about that. But really a little bit of a doji here today. Not a lot to see here. Of course, our breakout point is kind of the primary level of support in my mind, around 58. But that's also where we're going to have these rising moving averages, whether it's the 9 above it or the 20 just below it and catching up rather quickly right now. Probably that support zone. If I'm looking for a pullback, if I'm not in crude and I don't want to buy up here this close to resistance or whatever, I'm probably looking to hey, pull back a little bit into this ballpark, and then we'll talk. So another okay day, just kind of a day over in crude here. So ladies and gentlemen, that is the market recap for today. Interesting day in the market. Definitely some nice movement in a lot of areas, things breaking resistance. the NASDAQ in particular just flying through is what I think is the most interesting. But the Dow kind of getting in on the action, even though it really didn't do a lot technically to change from yesterday, or really, in my mind, just seeing it get involved, right? It's really been lagging behind the S&P and the NASDAQ as of late. So it's nice to see it kind of get involved with this bullish run that we've had over the last week and a half. So things continue to be pretty bullish, in my opinion. I expect that'll probably be where I am here tomorrow as well. As always, ladies and gentlemen, thank you so much for joining me. It's always great having you with me, and it's a lot more fun to do this with you guys than it is on my own. So thanks for joining me. Those of you who catch the recording, I know this is a weird time, so thank you for watching as well. Feel free to add any comments if you would like to, but we certainly appreciate you watching later in the evening as well. If you enjoy the market recap, it's always helpful and appreciated if you do give it a thumbs up. And if you are new around here, be sure to subscribe to the channel and hit that notification bell. And you can also join us over at Tackle Trading on Twitter. You can also find me at FrankMartin23 on Twitter as well. Had I known, like 8 years ago or 5 years ago, whenever the heck it was that I made my Twitter handle, had I known that you could actually make your name, I didn't know you could. I made a Twitter. I never used it, but it just gave me Frank Martin 23, and I took it. Had I known I was ever going to use it, I think I would have tried to come up with something more clever. But unfortunately, that ship has sailed, and too much, I don't want to mess around with it. So it's Frank Martin 23, and you can always find me over on Twitter as well. So. And I never feel like you can't reach out. Of course, I'm never too far away. So with that, ladies and gentlemen, enjoy the Cash Flow Club tonight to all of our pro members. If you're not a pro member, hop on over to Tackle Trading. Give us a shot. Take that 15-day free trial. See what you think. Probably have a lot of fun. Maybe you'll enjoy being here with our team Tackle and our recap gang, our halftime crew. So with that, ladies and gentlemen, I will see you on the halftime report tomorrow, as well as the market recap. So I'll be pulling double duty, working twice as hard while the other coaches are hanging out in Florida. They're going to claim they're working, but I've known those guys for a very long time. It's not all going to be work. So yeah, I would love 23 to be my age again. I'm much. I'm closer to double that than I would like to be. So, all right, ladies and gentlemen, get the heck out of here. You guys have a fantastic Thursday. Enjoy the Cash Flow Club tonight to all of our pro members, and I will see each and every one of you either in the halftime report or the recap tomorrow, or somewhere in the not too distant future. Thanks, everybody. You guys have a fantastic Thursday, and I will see you tomorrow.